Hello, I'm Daniel Franklin, Executive and Diplomatic Editor at The Economist, and welcome to this final panel session where we're going to be looking at the world in 2021. We're going to be taking out our crystal balls. The world in 2021 is the title of an annual publication looking at the year ahead that The Economist has produced now for 35 years or so. And this year, I think the edition is going to come out in a few weeks' time, particularly challenging to peer ahead in a world where we have all the effects, the impacts of the pandemic, but we've also got exciting political developments ahead, a new administration in the United States, change of leadership in Europe with Angela Merkel preparing to leave the stage. So lots to discuss. And joining me with their crystal balls are four leaders from the worlds of business and philanthropy and investment. Dambisa Moyo, global economist and author. Janet Henry, global chief economist at HSBC. Michelle Seitz, Chief Executive Officer of Russell Investments, and Rajiv Shah, President of Rockefeller Foundation. Welcome to you all.
Thank you.
So if I could start, let's start with the economy and move gently into politics. These things are all, of course, very much related. But the outlook for the global economy in 2021 is, of course, overshadowed by the outlook for the pandemic as well. We've had some exciting news just in the past few days. How is all that going to play out? Can I start with you, perhaps, Janet? What's your what should we be looking at? What should we be thinking about for the economy in 2021?
Well, as you rightly point out, I think the outlook for 2021 is fairly opaque. And one thing we know already is that obviously we had that plunge in activity in the second quarter of the year. We had a very strong bounce back in most countries in the third quarter. So it was always going to get a bit harder. And now already it looks like Europe is sliding back into some kind of recession because of renewed lockdowns. So I suppose going into 2021, the pandemic will still be a major influence on the outlook. And as you alluded to, we've had this good news in terms of a vaccine. Now, there was always some probability of a vaccine. We still don't know how effective it will be, how lasting it will be, whether people will even have it, even if they have access to it. But that does at least lower the probability of, I suppose, a third wave of lockdowns that are going to come through. But in 2021, unemployment rates are going to be higher. We know that investment is going to be constrained because we've had this impact from uncertainty. And we've got a lot of other factors that we already knew were underway pre-pandemic. So I think a lot of 2021 will be thinking about, yes, we already knew demographics were poor. We already knew that debt levels were high. How much additional damage has been caused as a consequence of this pandemic, and then how will things evolve from there? But certainly we've got some further improvement, but actually the easiest part of the recovery, it may not seem it, is probably already behind us.
Well, that's cheerful news. Well, Dambisa, if I could come to you and perhaps take us on a kind of lightning tour of the world. You know, there's a different expectation, I think, in depending on where you are in the world. And if you're in China, for example, the economy is already powering away. But if you're in some less developed parts of the world, the outlook is pretty grim and very, very challenging indeed. So what should we look out for in a sort of differentiated sense around the world?
So that's a wonderful question. I think the way I would pick up on what Janet just said is that even before the pandemic hit in earnest this year, we were already in trouble. And I say we, I mean the global economy was already exhibiting a considerable slowdown in growth. We were already deeply concerned about a range of headwinds, some of them that Janet just mentioned, rising population growth in many respects, both in terms of quantity, but also in terms of quality of the workforce, real issues there. We were already worried about climate change. We were already worried about debt. And then for me, what I think was particularly problematic is that the tools that public policy has traditionally used to fight against aggregate demand shocks or weakness in the economy, monetary policy, as well as fiscal policy, were already proving somewhat impotent. We were already living in a negative interest rate world. We were already living in a world where debt to GDP ratios on the back or in the aftermath of the financial crisis were quite sort of unsustainable. So we are just, in terms of where we are today and looking ahead, I think we are in for a lot of trouble, a lot of hurt, partly because not only are those structural forces going to continue on, but as I said, we have weakness in terms of the ability for public policy to respond. But layered onto the global pandemic, there are new or more catalyzed changes that are happening that I think will also have a material effect on employment and on investment, such as digitization. That is likely to add further fuel to diminution of jobs and opportunities. But to coming to your very specific question around differentiation, if I put the group of countries into sort of three groups, let's say advanced Western economies, China, and then the developing regions. I would say, starting from the bottom, developing regions, I've very recently turned incredibly bearish. Their fundamentals are weak. These are economies, I'm talking about the largest, particularly the largest emerging markets economies. These are economies that have at least 50 million people, the Brazils, Argentina, South Africa, Russia, etc. These are economies that are growing really just at around 1% to 2% per year. It's certainly not enough to double per capita incomes in one generation. You need at least 3% for that, a generation being 25 years. So deep worry about them, particularly in an era of deglobalization. These regions are very heavily dependent on trade, on foreign direct investment, and in a world that is deglobalizing, and was, by the way, before COVID hit, very worrisome. In terms of, I'm going to skip China for a second, in terms of Western economies, a lot of the sort of characterizations of high debt, impotent public policy, really slow growth are really manifested in particular in Europe, but to some extent in the United States. The Congressional Budget Office in the United States in 2016 was already forecasting unsustainable debt levels by 2030. Growth in Germany last quarter of 2019 was 0%, literally zero, and was really economy growing at 1% in the UK. So weak growth, Europe and the United States. And then finally, China, the only large economy not to suffer a recession this year, growing gangbusters. You saw the Q4 print for GDP at 4.9%. I would say that I'm pretty euphoric about China, partly because I feel in many respects China is where the US and Europe were in 1950. There's a lot of government intervention, a lot of infrastructure still yet to be built out. So there is an uplift there. But let's just be realistic. China is not completely immune from the global economy. They still are dependent on trade. They are a player now in terms of foreign direct investment, and they're now the largest lender, not just to the US government, but also to many economies around the world, which brings its own issues. But fundamentally, if I was going to put a bet, and I happen to serve on the Oxford University Endowment, as well as serving on corporate boards, I keep telling everybody, where is the growth coming from in the next decade? And I think the story is definitely one of China. I'll stop there.
Well,
thank you.
Well, at least we managed a wee bit of optimism at the end there on China, but in general, that's a pretty sobering assessment. And I'm guessing, Michelle, you're not going to shower us with happiness either, because I know you're worried about longer term financial security. So what is your crystal ball telling you about the economy and its impact next year and beyond, perhaps?
Yeah, I do feel the need to reach for balance, and so I might be corrected by our economists on the panel, but just on the flip side, I would say in complete agreement, biology is driving the economy. We've been talking for a long time about this as a dial, not a switch, and unfortunately, we're dialing back in many parts of the world, but we do hold out optimism that getting vaccines, getting treatments is a vital part of the solution. but doing it at scale legitimately is going to take longer than what we saw with the market's reactions the other day with the vaccination announcement from Pfizer and Biontech. So, from that standpoint, we believe we're in an upward channel of improvement. So things don't need to be good for markets to improve around the world. They just need to be improving. And so I think, to Janet's point, perhaps the biggest bounce that we've seen is behind us. So the second derivative might slow, but still an improving environment is a good environment. And it's hard not to acknowledge, even though it may not have as much of an impact as and Dambisa was talking about, you still do see, I think the numbers are 28% of liquidity pumped into the system as a percent of GDP, both on the fiscal and monetary side. Fiscal will have more of an immediate impact, and monetary a little bit more subdued. But I am reaching. I mean, I'm not dismissing the concerns that have been raised by our economists on the panel.
Share the view that do you share the view that China is a real bright spot? Is that or are there others to highlight?
We do. We certainly believe that there will be perhaps more improved trade communications with the new administration in the U.S. That's still to be seen, obviously. But you certainly do see bright spots around the world. And as I was talking about before, I mean, you can pump a lot of money into the system, but ultimately you do need to be cognizant of reskilling, getting people back into the employment ranks. And then where you were going with the first question, we do care a lot. It's the purpose of our firm to provide for people's financial security, and the financial health and financial resiliency of people around the world is critically important. And that has been tested with the pandemic. We can go into comments about that a little bit later as you have questions. But that's what we have our focus on, is how healthy are individuals around the world? How resilient are they, both in terms of coming back from unemployment or underemployment to reskill in a different type of world that's been caused by decreased globalization, as well as just-in-time supply chains going to a little bit more of a measured approach, perhaps. But that's our focus, is how healthy are the end individuals and the populations around the world to have a more systemic and sustainable rebound in the economies worldwide.
Yes, I think the idea of resilience at the personal level, but at many levels, is going to be important in 2021 and beyond, actually. And Rajiv, I know that you've been particularly concerned about resilience at a planetary level, and indeed, Rockefeller has made, I think, its biggest ever investment in the form of a $1 billion program over 3 years in a sustainable recovery. So clearly, you see in this crisis an opportunity to do something that is actually good for the future of the planet. Now, I'm sure I'd love to hear, and I'm sure everyone would love to hear a bit more about that. Where are you pointing this money to, and what difference are you hoping it's going to make?
Well, thank you for that question. And the reality is, I agree with our other panelists on both the negative outlook in many parts of the world, and the potential for a relatively strong recovery if we stay aggressive on fiscal and monetary policy, the way Michelle described, maybe a more optimistic outlook in certain scenarios outside of just China. And the reality is 2021 is a big year for choice. After the global financial crisis, President Obama called the G20 meeting, and the global leaders came together and had strong coordinated action to support the global financial system. In the same way, we need a strong global coordinated fiscal and monetary policy recovery right now, so that we can avoid some of the negative consequences. And that's why we committed $1 billion to that recovery, and I'll get into that. But if you look at what the negative consequences are, they've been outlined pretty clearly. We're on a freight train in terms of climate, with probably moving towards 4 degrees centigrade temperature increase. We know the World Bank has estimated I think based on the same underlying process that Dambisa described, that 500 million people in lesser developed countries are likely to be pushed back under an expanded definition of the poverty line. We know that, in fact, in America, for example, there's still 23 million jobless claims a week. And there's, by every indication, employment and jobs will recover extremely slowly relative to technology and relative to capital markets overall, as we already see. So the choice is, are we 10 years out going to have a planet that is unsustainable and deeply, deeply inequitable, making the inequities of today look like a bygone era that people aspire to? Or are we going to step in and make some, show real leadership in a coordinated global sense? And real leadership is possible. The monetary and fiscal recovery and stimulus that's been provided in industrial nations is between 20 and 30% of GDP. In developing countries, it's 2%. In emerging economies, it's 6%. That's unbelievable. We should not allow that. New leadership should bring the world together and say, we can very easily increase the International Monetary Fund's capacity to put $1 trillion to work on a global green recovery in much of the emerging world. Today, we're on track to bring 850 gigawatts of new coal online to power the future. That's not necessary. If you used some proportion of that $1 trillion stimulus that we're advocating for at the IMF towards a truly green recovery, you'd actually have a better economic and climate output by investing in the kinds of renewable energy solutions the Rockefeller Foundation has supported in many emerging economies around the world. It's not a question of do we have the technology, it's a question of do we have the vision and the desire to act in a globally coordinated way with an understanding of how important 2021 is in terms of setting the future and resetting the future. And that's why we at the Rockefeller Foundation did an extraordinary thing by our standards, which was mobilize $1 billion to invest in a global green recovery right now.
So that was going to be my follow-up question to you, which is what really moves the dial on this? I mean, clearly for you, the biggest investment you've made in 170 years of one of the biggest philanthropies. That's quite a mind-concentrating notion. But is it really the governments in the end that have to make the major moves that are going to make the real difference, or does every little bit of this jigsaw puzzle have to be in place to make it really effective?
Well, the governments and multilateral institutions have to be bold and effective right now in order to unlock the truly much more important private capital flows and foreign direct investment that's required, and domestic investment that'll be required to achieve a sustainable recovery. The EU has set the tone that about 30% of the total fiscal and monetary stimulus should in fact be greening of the economy. If you use that same construct for a global green recovery, by the way, I think a new Biden administration will abide by that construct as best they can, depending on what happens in the United States in the Senate elections in Georgia. But with respect to the global recovery, it would also be wise to abide by that. And yeah, 30% of $1 trillion going towards green infrastructure, renewable electrification, expanding access to basic and reliable electricity so that economies can overcome the number one constraint to growth and actually create jobs and business starts and small and medium enterprise labor demand. Those are the drivers of a more equitable and sustainable future. And those are the kinds of partnerships the Rockefeller Foundation invests in all around the world.
Janet, if I can come back to you on what will stick, do you think, of the experiences and the lessons that we've learned so far under the pandemic and the economic crisis that's gone with it in 2020? What will stretch into 2021? There's been a lot of talk about this crisis as an accelerator of trends that were already there, and we've heard a bit of that about that already. But what will the lessons from the year so far be that carry on and perhaps accelerate into 2021?
Well, I think we've covered enough of the downside risks that could be accelerated by the pandemic and some of these trends that were already underway. But actually, there have been some, potentially positive trends that have been accelerated. We're all aware of suddenly the speed with which even global cooperation on areas of healthcare, never mind the digital transformations in healthcare, have come through just in a transformational way. Anyone I know that works for the health service is saying suddenly decisions are being taken, overnight that previously took 2 years. So, I think there have been big changes there. And actually, people always talk about this kind of K-shaped recovery for 2021. I think that will be evident. If you look at, say, even US productivity in the last 5 years, compared with what we saw in the late 1990s, everyone says this has been a really bad productivity period. But actually, there's been very different sector stories. The two largest employment sectors in the US are education, healthcare, and professional and business services. Those are precisely the sectors that suddenly have been transformed over the course of the last year. We do roundtables with a speaker in the US. I moderate it in London, and our audience is in Asia. We used to all get on planes previously. So, I would say there have been some productivity enhancing developments as a consequence of this pandemic. I also am interested to see how things evolve, and I'm sure you're evolving to the political developments, but certainly there has been a greater awareness of the role of public servants and key workers and workers like gig economy workers and people on more flexible contracts. I think, it'll be interesting to see how much of this sticks. Whether there is a willingness for people to vote for more equality of workers' rights and, willingness to pay higher taxes to support spending in these areas. And I think, those will be some of the lasting influences. And I think the other thing that will be interesting to come back over the next year or two, when we think about the longer term impact of the scarring, is what it means for the broader financial sector. The numbers have been mentioned on the scale of financial stimulus that's been delivered in the West. China's been much more aware about the potential financial stability risks, potentially pulling it back a bit more quickly. In the West, it's throw everything at it. We'll deal with any financial strains a bit later. At some point, that will come back, depending on the pace of recovery.
Yes, and Dambisa, you've been someone who's looked at the impact of debt over the years. How do you see that playing out? And also, one of the things that I think Janet's just been talking about, this astonishingly quick speed of response, a sort of the unthinkable has started to happen. So do we need more imagination to try to grasp what might actually play out in the coming year?
Look, the short answer is yes, we do. A lot of the tools and the sort of policies that have been implemented during this crisis are things that are really not in textbooks, economics textbooks, and really are considered outside the realm of possibility. Negative interest rates, when I was doing my PhD at Oxford in economics, we never talked about negative interest rates, but lo and behold, we got negative interest rates. The notion that the US Fed would be buying sub-investment grade corporate debt. Again, where in the sort of lexicon of public policy tools would you have seen that? Never. So we do have to be imaginative. But living in the world in which we live, the debt story is deeply concerning. And I've written extensively recently about how it's no longer an economic story. It's evolved into a geopolitical one. The fact that China is the largest lender to the emerging markets, it's a bigger lender than the Paris Club, the G20. That is a material change in terms of financial services, but also how we interact and negotiate in a multilateral multilateral frame. The fact that the United States is, today, I think China is number one or number two. They switch between China and Japan, a biggest lender to the U.S. government. It's a big deal. We're in the middle of significant negotiations, and frankly, regardless, and to my mind, whether it was Trump or Biden, what has been revealed is a deep schism in terms of the views of how the average American sees the engagement with China. And I think whether it's business people, Joe Public, or policymakers, there's a sense that there needs to be some negotiation there. And maybe we can quibble about the style and approach and diplomacy, but the fundamental questions around intellectual property, around trade, etc., is something that the US and China have to get through. But the last thing I'll just say about debt is that every class of debt before COVID in the United States, government debt, household debt, corporate debt, credit card debt, auto loans, student loans were all at $1 trillion each. And that was clearly coming to a point of unsustainable. There are about, according to some of the estimates, 20% of American corporations are zombies. They're not even generating enough cash flows to cover the interest on their debt. And we know the situation in Europe. Angela Merkel has been very vocal about 725/50. The fact that Europe is only 7% of the world's population, represents 25% of GDP, but represents 50% of welfare payments, which is largely funded by debt. And again, leading to deep concerns about sustainability. So I just end by saying it is a precarious situation. Traditionally, economists like myself would say, hey, listen, we can grow out of it. We really don't like default scenarios. And obviously, if you look at works like This Time It's Different by Cameron Reinhart and Ken Rogoff, 900 years of sovereign debt, I mean, we land on situations where, debt to GDP ratios over 60% lead to low growth scenarios. And really, they end up in scenarios of default, which we really would not like to see. So not a great place to be. We've moved from economics and now into the realm of geopolitics, where we need a lot more subtlety and negotiation.
Well, look, we'll come to geopolitics and politics in a moment, but I want to ask Michelle about the word that really nobody has mentioned so far, astonishingly to me, because we've been talking about how much stimulus has been applied, extraordinary and previously unimaginable amounts, and yet nobody's really talked about inflation, which would have been the obsession in the past when in such circumstances. So should we not worry about inflation in 2021? And when people look at their own investments and their own financial security, is that not something they need to be concerned about?
Well, I think people are concerned about it. You've seen that in inflation hedges around the world. But I don't think that's a 2021 concern at all. It might be a 21st century concern. We may have.
When we come back next year, Michelle, when inflation has gone through the roof, we'll come back and we'll replay that.
Yeah, so I get it. That's okay. That's okay. I would be happy to come back in that scenario with hyper growth. I think we would all be pleased with that. But at the end of the day, I think what you're pointing to again, and what I've heard amongst all the panelists, is enormous change. These are unprecedented times, both in terms of geopolitics, global health coordination, levels of debt, planetary concerns, wealth equity around the world. And then we also have a longevity revolution, which I think I also heard a few comments around demographics. It's a very fast changing and different world than when we put our institutions in place, and specifically on the retirement side of the equation and the wealth side of the equation in the late 1800s out of Germany and the early 1900s in the US. And so when our infrastructure was put in place to provide for safety nets for individuals, at least in many parts of the world, most of us didn't live past the age of 65. Now we're living into our 90s and 100. And so we just need to be mindful that we do need bold, visionary leadership across governments, across corporations. And then we need to be honest with individuals so they can empower themselves to make sure that they're fending for the best future that they possibly can, whether it's in terms of numerous careers that they might have in their future, or planning for inflationary environments, or saving. And so I think we've done an extraordinary job at gaining access to financial services and access to credit. And we've thrown lifelines, sometimes a little bit too much, but we've thrown lifelines to people. But we need to make sure that we can make sure that they get back into the boat, they can service this debt, that they understand how to invest and how to be part of a wealth creation economy, And that's both in terms of jobs, but it's also in terms of savings. And so I think that will be another facet of what we should be working with, both, public, private, as well as individual communication.
Well, Rajiv, Michelle talked about bold, visionary leadership. Let's slide into politics with that. And do you see the prospect of bold, visionary leadership? You talked about, the need for coordination. We're going to have a G20 summit fairly soon. So far, I think the coordination, the collaboration may have been there among the scientists, but not so much among the politicians. So what are the prospects for that, do you think?
Well, I think geopolitical leadership goes in waves. I happen to be part of the negotiation of the Sustainable Development Goals and the Paris Agreement, and that was a wave where there was a lot of hopefulness around global cooperation, and perhaps it could have been better foreseen, but there was also a strong reaction the other way to that sense of global cooperation, and so it's my hope that a new Biden administration will come in and rekindle a sense of commitment to alliances and reground our aspirations on economic recovery, on a global climate plan and deal, on an understanding that you have to have everybody in it together, and that necessarily makes it messy and imperfect. And so I don't expect, the G20 you referenced, hosted by Saudi Arabia, to necessarily produce the sort of vision and plan you just described, but I would expect to see coordination happen in the first to second quarter of next year. And frankly, that's what I'd be looking for. If you were to ask me to say, well, what are you looking for to say 10 years out? Are we going to have a more equitable society defined by the upside of digital acceleration, technology integration, and real living standard improvements for the bottom 2 to 3 billion people on the planet? I'd look for what happens in the next 6 to 10 months around, can they put together a global recovery that's truly a coordinated one? And can we commit a non-trivial share of that recovery to a green future? And if we can do those two things, which is it, well, these things are achievable, actually. The IMF $1 trillion, I didn't get into in detail, but it's actually just based on a little bit of special action with respect to existing stocks of gold and an accelerated drawdown on special drawing rights. And it's been proposed by the group of 30 that often comes together to think these issues through. So, and it would take place with almost no real cost to the shareholders and the U.S. Treasury in particular. So I do think that's what I'd be looking for. And I'm hopeful that you'll see at least genuine efforts to get there. And then we can see if those efforts are successful.
Perhaps, Dambisa, I could come back to you on this, because you've been something of a skeptic on aid, for example. So I'm curious to know whether you think, or how much you think, international cooperation is actually desirable, or is there a danger that you get a lot of cooperation but directed in the wrong way? How do you see that?
Well, I think certainly more the latter. Daniel, you'll know I published an article on The Economist about just a couple of months ago, really arguing the case that Africa and other developing countries really desperately and urgently needed some sort of a refreshed Marshall Plan. And I use the term quite loosely. You are right. I have been quite critical of aid, systemic aid, with no sort of offered in perpetuity, with no deadlines, which I believe, and I still maintain, can be quite corrupting. The truth is, we also have a very solid record of aid interventions being incredibly helpful in the sort of light of the aid graduates, the South Koreas, the Botswanas of this world. But that aid, and of course the Marshall Plan itself, where aid was short, sharp, and finite, and incredibly effective. And so, just to be absolutely clear, I still maintain that we want to make sure that the coordination that Rajiv is talking about, which I 100% support. I am a globalist in my heart. It has to make sure that all stakeholders and people from different regions are represented on an equal footing. We can't have an us versus them. Oh, well, we'll make decisions up here and you just follow along. And I think that is the attitude that I was really getting at in my book, which is now 10 years old. But the ideas, which are, I hope are not utopian, that we should be sitting around the table in a coordinated fashion, trying to deal with these global public goods and issues of immigration, issues of healthcare and pandemics, issues of education that affect all of us globally. I don't think, to me, that's motherhood and apple pie, but we have failed to execute in a way that our citizens in different homes and different nations feel that they have a vested interest and that they are gaining. And hopefully the narrative will change in 2021 and will be a much more constructive one, because we do need to witness on to solve these countries' issues, and it can't be every nation for itself. It's just simply not going to work. And whether it's through disorderly immigration or some of the climate change and pandemic issues we've dealt with this year.
So I want to ask you all to sort of peer into your crystal balls and pick out a few key moments in 2021 for you. What do you see coming up, whether it's the climate summit that's COP26 that was meant to happen this year, but it's now going to happen next year. There's a lot of this happening in 2021, actually, a sort of sense of deja vu that things that were, we're going to have an Olympic Games that was meant to happen in 2020, but will be happening in 2021 and so on. But Janet, what perhaps to you first, what do you think are the key moments to watch out for in the year ahead that perhaps can give people listening to this a bit of a steer about what to expect?
There are so many, but I think first of all, it's at the global level dealing with the pandemic. We don't know how many effective vaccines there are going to be. There's a lot we don't know, but we know that until the pandemic is contained globally, it won't be contained anywhere. There's always a chance it comes back, and that's where the most important thing that comes through. The second thing I would watch for is how far the new president of the United States manages to proceed on the climate change front. It's easy to join the Paris Accord. He can do that unilaterally. He can't roll out $2 trillion of investment in clean energy. He's going to have to be creative. He's going to have to provide investment incentives, change regulation, do what he can to encourage US companies. He's going to have to work with China. I don't expect a U-turn on China trade, but he's going to have to work with China. The world's two biggest emitters have to agree that reducing emissions is crucially important. And then I'll watch Germany. With January, we'll get the first steer. Who's going to replace, who's going to be the new leader of the CDU? September, German elections. Merkel has been absolutely critical to anything progressive on Europe, and really handled it very, very carefully in terms of balancing Eurozone interests versus German interests, and making sure that some kind of evolution continues. This is a really critical German election in September.
Yes, she's been around for so long. It's going to be hard to imagine a Europe that doesn't have Angela Merkel at the heart of it. So, Michelle, what about you? What's in your crystal ball?
Sure. Well, again, I'll point to hopefulness and optimism. I would say that this scientific focus around the world and the sharing of information that truly has been unprecedented, and the shift toward biology and biological breakthroughs will have payoffs for years to come. I agree with Janet that this will continue to be a precarious environment, but that will aid the world globally. I think the same thing is true as we get policymakers around the world focused on levels of participation and the financial health of people around the world. Those will be also pivotal conversations that, with changes in various administrations around the world, I think will just be ever more present as we work our way through the economic fallout of the pandemic. But I think it will shine a light on what we need to do to provide for better financial health around the world, not just access to credit.
Rajiv, how about you?
Well, I would look first and foremost to pandemic milestones. The ones we've talked a lot about are the vaccine, but frankly, I think far before a vaccine is broadly, results in broad vaccination, you're going to see big increases in the United States in testing and in early and late stage therapeutics. And those two things together will probably have a bigger impact on the felt reality of the American economy over the first 6 months of next year than a vaccine. Second, I'd look for a global...
Before you go on to your second point, I'm curious to know whether you have any specific therapeutic pathways that you had in mind. Training, you presumably watch this closely.
Yeah, sure. I'd say on testing, we're going to go from about 30 million tests a month to about 180 million tests a month for the first quarter of next year. That's a huge increase, and it's both pooled PCR and antigen tests. On therapeutics, I think you'll start to see monoclonal antibodies, expensive as they are for patients that are very high risk, that have early symptoms. And then I think you'll see one or two therapies that are perhaps even more expensive, but for very late stage patients will have a big impact on the mortality rate. And all of those things are pending FDA EUAs right now. So that's the first set of milestones. The second one is what we've talked about here is I'd like to see an emergency meeting of the G20 or some such effort to launch a global coordinated effort to lift up the global economy with a focus on emerging markets and developing countries, and with a criteria that 30% of that investment, one-time special, short, and effective, is green and intended to be green. I hope I remembered Dambisa's criteria effectively, but I think they're excellent, and I agree entirely. And then the third is, in the long run, I'm with Michelle on the upside of both information and biological technology advances having real economic impact that then we'll deal with the consequences of longevity and the like. But we've always risen to that challenge.
Thank you. And Dambisa, the last polishing of the crystal ball from you.
So, I would hate to repeat all the wonderful contributions from my colleagues. So maybe what I would say is I've spent a lot of time going back in history to the Gilded Age, which is a period between 1870 and 1900, tremendous economic growth, lots of globalization, big corporations, and very similar to the period of 1950 to 2008, where we had 8% average growth globally. And the question is, what happened next? Well, we know that we had three bad things happen in succession. We had World War I, 1914, 1918, the Spanish flu, which killed at least 50 million people, 1918 to 1920. Then, of course, the great crash of stock market, 1929, collapse. What subsequently happened was 25 years of progressive politics. We had bigger government. We had deglobalization in the form of Smoot-Hawley. We had much more lower economic growth, high unemployment rates. And really, you had to see government step up to take much more initiative. I would just say that those are the things I'm looking for now. I think this history is repeating itself. I think we are going to see much bigger government stamping its imprimatur, not just in terms of welfare state and some of the big programs that we're talking about here in terms of vaccinations, et cetera, but really in terms of stepping into the economy as an arbiter of capital, as an arbiter of labor. I think we're going to see a lot more antitrust legislation, which we've already seen smatterings of that vis-a-vis technology, but other areas that have become quite oligopolistic. And I do think, I'm afraid to say, we'll see much more deglobalization until we can see much more coordinated efforts around the world. So a little bit negative, but the good news is that if we're in it together, I think there is a sliver of hope. Thank you.
A sliver of hope. Well, thank you very much, all of you, for your insights. We've reached the end of our time. I think you did take us on a sort of arc from very deep pessimism to what I would call nuanced pessimism and even glimmers of optimism. I love the idea that biology is driving the economy, which I think you said, Michelle, and biology, as we've heard from several of you, is moving at a remarkable pace and does offer a lot of hope, and there seems to be some expectation of greater political coordination around the world. So it's not without some things to be cheerful about, but I think we, from what all of you have said, no illusions about the really challenging environment that the world goes into in 2021. So thank you all, Dambisa, Janet, Michelle, and Rajiv, for an excellent session. And we will check up on how it did in a year's time and see how much of this panned out as you expected. Thank you so much.